And we're also waiting on fresh data from Japan. A GDP revision is expected to show its economy did better in the April to June quarter than it had first been thought. The original flash estimate suggested output only expanded by an anemic 0.1% over the 3 months, but forecasts suggest that will be pushed up to 0.4%. Going forward, the strength of the yen remains a concern, though. And yesterday, Japan's government raised concern at the fact that China's ramped up purchases of its debt. Traders suggest the move may be contributing to the yen's rise. And the Japanese finance minister said he wants talks with Beijing on the issue. Well, for more on all of this, we're joined from Tokyo by Eamonn Fingleton. He's the author of In the Jaws of the Dragon and other books about the Asian economies. Now, Eamonn, you're relatively upbeat about Japan's prospects, despite its fairly stalled growth and record debt levels. Tell us why.
Yes, indeed. Basically, the Japanese economy internally is doing pretty well, considering how other economies are doing. The domestic economy is doing fine. And also, if you look at the external position, the exports and the trade balance, it's very strong. Japan is continuing to export. And the current account surplus this year will be greater than last year. Last year's number was $141 billion, which is a pretty respectable number for a really bad year for the world economy.
Right. All of this, though, certainly being impacted by the Japanese yen. It continues to trade near a 15-year high against the US dollar. Japan now potentially pursuing talks with China on its involvement. And what do you make of this?
Well, I think there's a certain irony here. But when the dollar goes up, people say how wonderful America is. When the yen goes up, people say, "Oh, Japan is kaput." Frankly, the fact that the yen is up is an indicator that the Japanese economy is fundamentally very strong. Yes, the Chinese reportedly buying yen bonds is quite an interesting development, quite controversial, I would say. I doubt if this will continue, but let's watch it carefully.
Right. Now, let's take a look at what Japan's been saying to try to drive down the value of its yen. It's now saying it's carrying out possible currency intervention simulations. Now, might the finance ministry actually act on intervening?
I think basically, yes, they don't want the yen to go too high, but I would compare this to a cyclist who doesn't like going uphill. He would rather pedal downhill. The Japanese would rather have a low yen, but frankly, Japanese exporters are perfectly capable of coping with a higher yen. They have very, very strong industries, very strong brand names around the world. But many of the things they're doing, nobody else in the world can do, particularly in producers' goods.
All right, we'll leave it there. Eamonn Fingleton there in Tokyo. Thanks very much.